Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Kristin Lee, and joining me are my co-hosts, CoinDesk Managing Editor of Global Capital Markets, Lewitinn, as well as Managing Director of International Content, Emily Parker. Good morning, Emily and Lawrence.
Morning.
We're seeing we're seeing the crypto markets kind of mixed results. Let's take a look at Bitcoin. The CoinDesk Bitcoin price XBX index is currently trading at $38,073. It's down about 2.2% over the past 24 hours. And the CoinDesk Ether price ETX index is at 2618. ETH is gliding up a bit, about over % after the London hard fork activation that has just happened. And finally, the CoinDesk's DeFi index is at 561. The DeFi is up almost 6% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. All right, so we've got some breaking news. It's hard fork day. The Ethereum blockchain has just undergone an upgrade about a half hour ago that aims to optimize the network of the world's second largest cryptocurrency by market cap. Emily, it aims to stabilize transaction fees, curb total supply growth over time.
Yeah, so this has been a very much anticipated technological upgrade in the cryptocurrency community. But the thing with these upgrades is we don't always see the impact right away. It could take some time. There was a lot of anticipation, for example, on Bitcoin halving, but we didn't see an immediate impact on the price. So I think the question is, people are bullish about what this means for ETH because one of the biggest problems with ETH are the volatility and the unpredictability of gas fees. So in theory, this should stabilize that a bit.
Right. Lawrence, are we seeing any impact on price right now? Bitcoin's slightly down and Ethereum is slightly up.
Yeah, look, we've had a big run up for the past couple of weeks. It's about 60% or so. And then yesterday there was one would say a sympathetic rally with Bitcoin and then a subsequent sell-off with Bitcoin, but still it was, at the very least, it did quite better than Bitcoin, and it's up compared to 24 hours ago, obviously. And I think the market's still wait and see, but it's definitely been positive over the past few weeks, and it's had a far more sharp rally compared to Bitcoin over that time period. So, if anything, it's now the new star for the time being in crypto.
Yeah, and we'll have more on that with CoinDesk's Kristin Kim, who tracks Ethereum very closely. Meanwhile, the crypto community is on high alert as a bipartisan group of policymakers clash with the Biden administration over crypto tax provisions buried deep in a $1 trillion infrastructure bill before the Senate. Senators Ron Wyden, Pat Toomey, and Cynthia Lummis want to narrow the definition of a broker to ensure people not traditionally thought of as brokers are subject to enhanced reporting requirements. And joining us now to discuss is Kristin Smith, the Executive Director at the Blockchain Association, a lobbying group. Welcome, Kristin. So the Biden administration wants to maintain a broader definition of broker, from what I understand, to generate a projected $28 billion in revenue from crypto investors. And there's this Wyden, Toomey, Lummis amendment that's been proposed. What's that all about?
Yeah, so this amendment aims to keep the miners, the stakers, the software developers, other sort of decentralized players that don't have access to the customer information that would be needed for information reporting out of this amendment and focus it on the traditional cryptocurrency exchanges who do have access to this kind of information. And not only do they have access to it, but they want to provide meaningful reports to their customers at the end of the year to help them pay their taxes. So this really focuses it on the area that we believe is best suited to provide this type of reporting. Now, what we're hearing this morning is that this amendment may be voted on the Senate floor as soon as today. And the threshold in order to win the amendment vote is 60 of the 100 senators. So this is a very high bar. So far, with other amendments, we've only seen technical ones get enough support to pass and be added to this. So it's incredibly important that anyone who wants to help in the cryptocurrency call their senators today, reach out to us and help get onto this sign-on letter if you're an organization, or if you have access to a large platform and a large user base. We need to get the word out that folks need to call their senators.
Kristin, crypto is still, relatively speaking, a small sector of in the entire economy. Why should the average Joe care about heavy reporting requirements being placed on crypto companies and crypto organizations? Everyone else feels like they have to do it too. Why should crypto get off so easy?
Well, the reason is, and we're not saying that crypto exchanges like Coinbase or Kraken or Binance US should not have these types of reporting requirements. Everyone agrees that that's good. The problem is the definition was drafted very hastily and it's incredibly broad. And so if you're a Bitcoin miner processing transactions and adding blocks to the Bitcoin blockchain, you don't know the names of the people who own the Bitcoin that is being the transactions that are being added to the ledger. I mean, that just doesn't simply work because this type of reporting requires that you have a name, an address, a social security number. And if you are, in the traditional world, if you are, somebody who is the security guard that's taking money from one bank to another bank, you don't have those type of reporting requirements, even though you might be aiding in a transaction. So similarly, we think these types of players are not the ones that should be participating in this. And quite frankly, imposing any of these obligations would be a huge, huge invasion into personal financial privacy of individuals who are trying to transact using blockchains on a peer-to-peer basis.
One argument people make is that that if these requirements come into play, miners would leave. China didn't seem to care if that happened there, and people are making the national security argument. So if China doesn't care about miners leaving from a national security argument, why should the U.S. care? And what's the
U.S. should care because. Yeah, U.S. miners are very green, right? They use renewable energy for mining. So there's that argument. But also, we want the U.S. to play a role in the crypto ecosystem going forward. If all of the software developers and the miners and the investors and the people who are participating in the crypto ecosystem can't be in compliance with the laws, they're either going to be forced to leave or forced to shut down or just continuing to operate in violation of the law, which no good actor wants to do that. And so it's really important that we get this fixed. And so I want to reiterate, if you are an individual, there's a great organization called Fight for the Future that has propped up a very easy way to call your senator. If you go to fightforthefuture.org/actors, there will be a link there where you can weigh in with your senator. It's really important to call today because, as I said earlier, there's a very, very good chance that this vote happens sometime today. It could be pushed till sometime this weekend, but we need to prepare and act as if this is going to be a live vote on the Senate floor today.
So if the issue is just about, the U.S. is clearly trying to attract miners, as you said, for various reasons. We have states like Texas and Florida, really kind of actively competing for them. But obviously, miners are going to have to be taxed in some way if they become a major economic force. So what's the fix here? I mean, it seems like clearly classifying them as a broker isn't the right path. But isn't there just some other form that they could fill out? I mean, how they're not going to be exempt from taxes.
And be clear that the language right now is about information reporting. So this is about businesses having to file forms about their customers to the IRS, and then also providing that information to the customers. If you're a mining business in the US, you're subject to the same taxes of any business, right? There aren't necessarily, you don't get taxed. You shouldn't have to pay extra taxes, but you pay income taxes based off of what you do and any other, associated real estate taxes or taxes that any business has, right? This isn't treating crypto businesses any differently, but it is asking that the regulations be written in a way where if you are a broker and you have customers and there's a contractual relationship between the broker and the customer, that we write new regulations in order to give direction to how those companies can report effectively. But what we can't have is a software developer who, because they wrote software that allows people to transact on a peer-to-peer basis, to have to then go and figure out everyone using their software, ask for their social security number and home address and name, and report that to the IRS. That's just not feasible. That's not information that they collect in the normal course of business. It doesn't make sense for these types of entities to do that. And there seems to be an information gap between the White House and Senator Wyden and Lummis and Toomey, who are pushing this bipartisan amendment, that realize it's not appropriate to ask these types of individuals and entities to spy on each other, collect that information, and report it to the government. That's just not how information tax reporting has worked in the traditional financial services world, and it's not how it should work in the cryptocurrency world.
And I just kind of want to double down on Lawrence's question, just about okay, so mining leaves the US and who cares? I mean, I think that's just something that's a hard point to articulate to the general public, right? I mean, I think crypto advocates say okay, well, we don't want to be left out of this phenomenon. But I mean, again, why is mining so important for the United States? I mean, why should the average person care if this industry leaves? Because that's the argument the crypto industry is making. And I don't think the general public necessarily sees that as a problem.
Well, yeah, as I mentioned before, there's issues with climate, there's issues with jobs, but we also want to have a strong Bitcoin network where it is decentralized and there are participants and miners all around the globe, right, for redundancy purposes. And, the U.S. has always been the leader in financial services. The U.S. has always been a leader in technology. And looking forward, whether it's Bitcoin mining or other blockchains, we think this is going to be the foundation of both, the internet and financial services. And, as a proud American, I want this industry to be leading here in the U.S. and not leaving. I mean, this is going to be the foundation of so many jobs, so much economic activity. The U.S. should play a leading role in this and not discourage the innovation here in the United States.
Right. Kristin, we got to wrap it up there, but thank you for joining us this morning, and you're fighting the good fight, so good luck. That was Blockchain Association Executive Director Kristin Smith. Coming up, checking in on Asia and a crypto markets update with independent research provider Fairlead Strategies.
From fueling local economies to connecting global markets, the future of money is taking shape now. Crypto State by CoinDesk will bridge communities of crypto investors, thought leaders, and developers to tell the global story of decentralized finance. Join us for this virtual event series as we make stops in Israel, Bahrain, and the United Arab Emirates to dive into the movements that are disrupting markets and changing communities. Register today.
Time now for the daily forecast, an update on what's happening in the Asia crypto markets. Here's Justin Solomon of Forecast News.
Welcome to the Daily Forecast, August 5th, 2021. I'm Justin Solomon of Forecast News, covering all things blockchain, filling in for Editor-in-Chief Angie Lau. Coming up, China's E-CNY trials continue. Google opens up to crypto advertising, and Oscar Mayer rolls out a hot Doge sale. Now let's get you up to speed from Asia to the world. First up, China's E-CNY pilots continue at a rapid pace. This time round, the central coastal city of Shanghai and Suzhou, which lies just 50 miles away, are both involved. 500,000 virtual gift packages containing a total of 20 million digital yuan will be given away in a lottery by Bank of Communications Shanghai and e-commerce giant JD.com. The lucky winners will receive 20 digital yuan, that's little over $3 in a red packet, traditionally a cash gift given out on special occasions, plus a 20 digital yuan coupon to be used for purchases with JD.com. The company began offering purchases using the E-CNY back in December 2020 and now has almost 1 million digital yuan sub-wallets active. It's often seen as the Amazon of China, as you can buy anything from a piano to power tools or even a pool. Meng Liu, an analyst at Forrester, told Forecast News that the People's Bank of China is relying on the tech giant's existing massive customer base to quickly expand the scale of the digital yuan. He says laws and regulations on anti-fraud and data-related responsibilities should be next on the agenda for the digital currency's developments. Meanwhile, Google has allowed crypto ads to return. The search giant had banned all crypto-related ads in 2018, and that ban was reversed earlier this week, but only for crypto exchanges and wallets targeting the United States and only for certain products. One expert told Forecast News it's a step in the right direction.
It definitely sends a signal, which is there is an interest, whether it's from retail or more corporate participants, for crypto. And so Google wants to get a part of that and at least enable some of the participants to advertise for it.
Google says all advertisers must be certified with them and comply with their rules. No advertising will be allowed for initial coin offerings, DeFi trading protocols, or any using celebrity crypto endorsements. But D'Anthony says he doesn't think the news is behind an upward crypto market trend.
It's more about crypto having been range bound in that 30K region for quite an extended period of time, while most of the other markets, and I'm talking about traditional markets, were gaining. And so at some point, with all the positive news that's been accumulated in the crypto space, it was bound to kind of pop up.
He expects the Ethereum London upgrade to be the key market driver for at least the next few days. And that upward trend on the markets continues. Bitcoin up almost 3% at just under 39,000 US dollars as of 4 p.m. Hong Kong time at the end of the Asian trading day. And in the top 10 for cryptocurrencies, Uniswap up 10.5% and Polkadot up 9%. And finally, feeling hungry for a snack and maybe a crypto investment? If so, Oscar Mayer might have the answer to your prayers with its Hot Doge sale. Yep, you heard me right, a Hot Doge sale. The American hot dog brand, famous for its Wienermobile, is selling a single limited edition pack of Hot Doge wieners along with a cash amount allowing the purchase of 10,000 Dogecoins. And it seems like there are a lot of hungry investors out there, with the company tweeting that the eBay auction link had gone down shortly after it opened. The lucky winner will not only be able to stuff their stomachs and their crypto wallet, they'll also be doing some good with all net proceeds going to Feeding America, which supports 200 food banks across the country. Now that's a good dog, or Doge. And that's the daily forecast from our vantage point right here in Asia. For more, visit forecast.news. I'm Justin Solomon. Until next time.
The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
Let's have a live look at Bitcoin. The CoinDesk Bitcoin price XBX index currently trading at $37,774. Bitcoin is down slightly, almost 3% over the past 24 hours. And the CoinDesk Ether price ETX index is at 2612. ETH slightly up about 88 basis points. And the new DFX CoinDesk's DeFi index is trading at 562. DeFi also advancing almost 6% for the day. And joining us now to discuss the crypto markets is Katie Stockton, technical analyst at independent research provider Fairlead Strategies. Welcome, Katie. So we have this Bitcoin daily chart that you sent us, and I see that in the chart you've written down 35,000 support, 42,500 resistance, and a secondary support at 30,000 and support at 30,000 and a resistance at 51K. Maybe you could go over to some of your analysis behind these numbers.
Interesting from a technical perspective. When we saw Bitcoin come down for its third test of that support around 30,000, it was a very, very, very widely watched level. And with that, it became what we called ripe for a shakeout, meaning a false breakdown. And indeed, that's what we saw. We saw a false breakdown and pretty much a rip higher off of that successful test of support. Breakdowns in our work require a couple of good closes below an important level. And we never really saw that below 30,000. So that support into longer picture of Bitcoin, a weekly bar chart or candlestick chart, you'll also see that it's a very key support level based on something called the cloud model. But looking at the daily chart, you can see the cloud model was previously a gauge of resistance. It looks like sort of a shadow that had been hanging over Bitcoin. But just very recently, we saw Bitcoin clear that cloud-based resistance. And now we have a couple of important levels in play based on Fibonacci retracements. So not to get too technical here, but if we were to see that 42,500 level cleared decisively, the targeted resistance would become around 51,000 based on the nature of those Fibonacci retracement levels. And indeed, I think that's where Bitcoin is headed. This pullback that's been underway this week, to me, is just a simple retracement that's very natural to see once some resistance is discovered, but the breakout is already there.
Katie, for the kids at home, can you explain what cloud support and resistance is, how it's derived?
So the cloud-based support and resistance, it's derived from a Japanese model called Ichimoku that's become more widely available just using charting software and tools. And it's designed to provide sort of a one big look at price and price action with a gauge of the prevailing trend, and also a gauge, of course, of support, which is an area of potential buying pressure, and resistance, which is an area of potential selling pressure. The model, without getting too complex here, is derived from midpoints of price. So it's taking a high-low range and taking the midpoint of that range and projecting it forward, not dissimilar from a moving average-based model, which, of course, moving averages are looking at historical prices and using that as a way to sort of eliminate the noise and isolate the prevailing trend. So that's what the cloud does as well. And for currencies, especially even cryptocurrencies, it tends to hold a lot of relevance as support and resistance. So we've really begun to adhere to this cloud model. And indeed, it's helped us with our Bitcoin call to our subscribers.
So everybody's watching the Ethereum hard fork, and I was just curious what your projections might be for ETH over the short term and the long term.
You know, all the cryptocurrencies tend to stay in lockstep from a directional perspective. So you can trust that when Ether is trending higher, so is Bitcoin, at least over sort of the weekly time frame. Now, we do look at the ratios, so between Bitcoin and Ether, and we've seen very recently with this run up that we've seen across the board, underperformance by Bitcoin. And what we've learned over time is that in a risk-on environment for cryptocurrencies, Bitcoin is then seen as more of like a defensive play, something that's a little bit safer, and therein actually tends to underperform, whereas Ether tends to be an outperformer when cryptocurrencies are in sort of a risk-on mode, which indeed has been the case over the past, say, 3 weeks or so since they've seen these successful tests of support. So Ether 2 is testing some key Fibonacci retracement resistance right around 2750, and a breakout above that would target about 3500 as the equivalent level to that 51,000 for Bitcoin.
So Katie, if you were to assign probabilities, upside or downside over the next, let's say, month or two, where would it be for Bitcoin?
Yeah, I would say upside seems more likely than downside, based primarily on just the turnaround in momentum and the breakout above the cloud-based resistance levels as providing a positive technical catalyst for both.
All right, Katie, thanks for your analysis. Very, very concise. Appreciate your insights. That was Fairlead Strategies technical analyst Katie Stockton. And coming up, the Ethereum London hard fork has happened. We'll have more with CoinDesk's Kristin Kim, and checking in with CoinDesk Global Policy and Regulation Managing Editor Nick Day as well.
CoinDesk Indexes, the market standard for crypto assets since 2014. The CoinDesk DeFi Index is our latest product and provides insight and exposure into decentralized finance. Our indexes are key for investors looking to access and understand crypto markets.
The CoinDesk DeFi Index is the best tool for a diversified approach to this compelling new category of digital assets.
The CoinDesk DeFi Index, measuring the investable DeFi market.
The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
All right, breaking news. Ethereum's London hard fork has activated, upgrading the network to stabilize ETH transaction fees and burn new coins according to network usage, among other improvements. And joining us now is Kristin Kim, CoinDesk research analyst and editor of the Valid Points newsletter, breaking down Ethereum 2.0 and its sweeping impact on crypto markets. Welcome, Kristin.
Thank you, Christine.
So, I love it. Two Kristines in the house. All right, break this down for us. Tell us what a hard fork is and why it's so significant for our viewers who are not so familiar with the technical terms in crypto.
Definitely. So a hard fork refers to a backwards incompatible upgrade that happens on a decentralized network like a blockchain. And one of the reasons why it's so significant is because of how difficult it is to pull off in a decentralized network. For a backwards incompatible upgrade, all users who are connecting to the network needs to upgrade their software at the exact same time in order for the upgrade to be pulled off smoothly. So today we saw roughly 80% of computers, also called nodes, connected to the Ethereum blockchain, ready to upgrade their software. And because of that, the Ethereum network didn't experience a chain split, a sudden event in which users are running one version of Ethereum software and another part of the users are running a different version of the software, and then you've got two networks. Because enough users, miners, exchanges, other infrastructure service providers all were able to prepare and anticipate this upgrade in advance, we did see a successful execution of a backwards incompatible hard fork on Ethereum.
Kristin, a little bit what we can expect to see over the short term and the long term, because I think that's, there's all this anticipation always for these kinds of events, but then sometimes people are disappointed when stuff doesn't happen right away. Will we see any significant changes, just either in price or gas fees or anything like over the next few weeks, or is this a longer term phenomenon?
Both. So one of the things we were looking out for in the short term was definitely whether or not there was going to be a chain split. Now we're tracking how much ETH is actually being burned. And the last I checked right before I came on here, over 110 ETH has been burned on the network, which equates to roughly 280,000 USD. It'll be interesting to see how that impacts the total supply of ETH moving forward. Other things we should continue to watch out for is the existence of technical bugs, unforeseen issues with the code. Some of those take months to be discovered. Other things that we should also look for is the gas price. How costly is it to use the Ethereum network? Now it's going to be a lot more predictable to know what the gas price will be during the next block of Ethereum. And the last I checked before this show, gas fees, which is another term for transaction fees on Ethereum, is roughly the same level as it was before the upgrade. So that's a good sign, but it could go up or it could go down moving forward. And one other interesting note that I'm just going to say is the existence of empty blocks. I've been seeing some conversation around more blocks on Ethereum being mined without any transactions in them. So figuring out the cause of that, whether or not that's a temporary phenomenon, is something to keep an eye out for.
Kristin, what does the hard fork mean for DeFi? Of course, when you talk about Ethereum, DeFi is part of the conversation. So what does it mean for tokens that were built on Ethereum?
I think for DeFi, this is a very, very important upgrade because it creates better usability for Ethereum. One of the difficulties with using Ethereum for decentralized applications, especially ones that require high-frequency trading, was trying to bid on what the fee would be, what would be the optimal transaction fee to have your trade confirmed in the next block. Now with EIP 1559, which is one of the 5 code changes included in London, there is, again, more predictability with that, but also the Ethereum fee market is more efficient. And so I think it'll have a positive impact on decentralized exchanges, decentralized lending markets on Ethereum.
Kristin, also last week you reported that there were some bugs on the testnet, and you alluded to this earlier, specifically with Geth, which is the most popular software used to connect to Ethereum. Perhaps you could weigh in on these risks.
Right. It's a risk that comes with executing a hard fork that every single user needs to upgrade to. And if there's no client diversity in that there's only one version of Ethereum that most people are running, the risk of a bug is a lot higher. You had mentioned, Kristin, that this is the most popular Ethereum software client, but because of the event that happened on the test network, there's been a greater push and a greater understanding that more users need to diversify the kinds of software that they're running for the Ethereum network, so that if there is a bug that's discovered in any one of the 3, 4, or 5 Ethereum clients that are available to users, it won't have a big impact on decentralized applications. It won't have a big impact on the network. So the biggest thing I would say is client diversity and promoting that among users, creating awareness about that for how important it is for the health of a blockchain, health of a decentralized network.
So, Kristin, it seems that Ethereum is going to be moving towards closer towards proof of stake versus proof of work, what it is currently now. What will this mean? This upgrade mean for that movement ultimately, and what will happen to the proof of work model in general?
So funny enough, Tim Biko, the chair of the All Core Developers Biweekly meeting, had tweeted that one of the biggest things he's looking forward to now that the EIP 155 and the London hard fork is over is that now developers will be able to focus completely on getting the merge, the transition to proof of stake completed. So within London hard fork, there's not too many upgrades that are specific to preparing for the proof of stake transition. However, many developers were focused on just getting this done, this big change to Ethereum's fee market done, and now they will have the bandwidth to really focus on pulling off the merge, the upcoming upgrade, which is scheduled for roughly next January, hopefully, with their full efforts and their full force.
Kristin, do we know what this hard fork will do to price? And you mentioned burning some of the coins. Is that meant to stabilize Ethereum's Ether's price?
In the short term, before the merge is activated, I don't see a big impact on ETH supply or ETH price, primarily because currently Ethereum continues to issue new coins through block subsidies, through a fixed amount of ETH per block. That's 2 ETH per block. And the amount of fees being burned, I don't think will offset that completely. However, in the proof of stake system, and once Ethereum does the merge, the issuance of new ETH per block will reduce dramatically. It'll go down quite a lot. And that's when I think we'll start to see the full force of this burn effect on the price of ETH as it impacts and potentially reduces the total supply of ETH over time.
Right, great.
There were people who were compensated, of course, for having getting rid of bad contracts, and many developers came up with a way to gamify this. How is that removed in this hard fork, and what other kind of potential pitfalls are people warning about?
Right. So one of the difficulties with creating something that you think will improve the network and codifying rules on the network is that there's ways to get around it. So one of the code changes, one of the 5 code changes gets around something called gas tokens, and that there was an incentive for people to delete their contracts, incentive for people to reduce the amount of data being processed on the blockchain. But people started to create tokens off of that and purposefully start bloating the Ethereum blockchain so that they could get the kind of incentive and reward for reducing Ethereum blockchain state size. So one of the 5 code changes kind of took away that incentive, reduced that incentive so that people weren't trying to game that area of the Ethereum blockchain. I would imagine that one of the things we should continue to watch out for is ways in which people are going to try and game the Ethereum fee market, how people are going to leverage the minimum base fee, priority fees, how people are going to try and optimize to extract the most value that they can. With miners now not able to rely as much on transaction fees for their total rewards, it might push some miners to be more aggressive in the way that they extract value through front-running trades on decentralized exchanges, through potentially reorganizing transactions within blocks, perhaps reorganizing blocks themselves. These are all risks that we'll have to watch out for in the months to come.
And we know that you will be watching them closely for us. Kristin, our in-house Ethereum expert at CoinDesk, thank you for joining us.
My pleasure.
That was CoinDesk's Kristin Kim, research analyst and editor of the Valid Points newsletter, which you can sign up for at CoinDesk.com. Time now to check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who is also the editor of CoinDesk's The State of Crypto newsletter. Hey there, Nick. So you have been watching this infrastructure bill going through the Senate very closely, and now they have this new amendment. I'd like to get your take on it, first of all.
Yeah, so the amendment proposed yesterday does seem to close, the biggest loopholes that, the industry was worried about. It addresses, if a party is solely involved in, validating transactions, selling hardware, software, or developing a cryptocurrency or the protocols to support a cryptocurrency, then they are exempt from this definition of a broker and would not need to file information reporting, forms. Keyword there is probably solely, right? If you're also doing other stuff in addition to those activities that could be, construed as providing support for transaction services, you're probably still a broker. But this is a pretty, very specific amendment. And as Kristin said earlier, we are watching to see if that gets voted on today. The other interesting amendment that happened yesterday is Senators Lummis and Marsha Blackburn of Tennessee also filed an amendment to address a concern around cryptocurrency being used for illegal transactions. If this amendment is adopted and passed, then what will happen is federal agencies, including the Department of Homeland Security, the FBI, FinCEN, OFAC, will have to basically evaluate what kind of tools there are to track digital ledger transactions that are being used for illegal purposes like ransomware. So that's just a more growing interest around this use of crypto in the world.
Nick, if you had to guess, what do you think is going to happen? How likely is it that this bill is going to be amended?
Honestly, I'm not really sure. Obviously this is a bipartisan amendment, which will give it some support. Senator Wyden is the chair of the Senate Finance Committee, which oversees the IRS's budget. So I think that's also probably another point in favor of it. He's saying, this entity that he has direct supervision and jurisdiction over needs this carve out. So, as far as the Democrats are concerned, I think, he'll get some support there. And then on the Republican side, this does have two Republicans, including Senator Toomey, who is the ranking member on the Banking Committee, and Senator Lummis, who has been, a very vocal advocate for crypto. So there's definitely support. And then, Kristin mentioned the call-in campaign earlier. So I spoke, I got a response from Fight for the Future, and they said that as of last night, over 6,000 people had, called in already. So there's definitely a lot of vocal support. I think the question is, will that be enough before the vote happens?
Any vocal opposition?
I haven't seen anything yet, but Senator Portman, who is believed to have inserted the original provision, is said to be whipping votes against it. But I haven't been able to confirm that. This was through, a mainstream news report.
Yeah.
So
I read in Politico that there seemed to be a bit of a clash with the Biden administration that wanted to get this provision through.
Yeah, that would not be surprising at all. The provision, because it is, part of a bipartisan negotiated infrastructure deal, it definitely went in with support from not only its author, but also, presumably the president's office and, whoever else was on the specific team that was negotiating this huge package.
Yeah, well, we'll see what happens. It could be passed very soon now. So thank you for the update, Nick. That was CoinDesk Managing Editor of Global Policy and Regulation, Nick Day. Don't forget to sign up for the State of Crypto newsletter on CoinDesk.com. Time now to check in with Crypto Twitter with our tweet of the day. And, I almost felt threatened when I read this, so I figured I'd bring this up. Attorney and lobbyist Jake Travinsky tweeting, if you have a big platform in crypto and you aren't using it to tell your audience to call their senators right now in support of the Wyden, Lummis, and Toomey amendment, I will haunt your dreams for eternity. So that one's for you, Jake. All right, I don't want you haunting my dreams for eternity. That's it for First Mover. Thank you, Emily Parker and Lawrence Lewitinn. I'm your host, Christine Lee. I'll be back live at 3 p.m. with All About Bitcoin. Coming up at noon is The Hash. You're watching CoinDesk TV.